I have long been a huge fan of Malaysia. It's one of my favorite countries. It's a great place to live. I think I've said many times, the best quality of life per dollar spent anywhere in the world is Malaysia. It's got lots to appreciate. And I've spent little times, part of the year living there at various period of times. I've considered making it my home base. I obviously haven't done that, but it's a great place. This being said, from an investment standpoint, although property prices are ridiculously low, I mean, we're talking about lower on an inflation-adjusted basis than they were in 1997, okay? Late 90s when they had the real estate boom there. In spite of that, I have also said that typically, you can get good deals. Like what you're getting tangibly for the money seems really excellent. Although this is the case, it does not strike me as being imminently going to pop, right? So you've had big pops in real estate in places like Bali, in Turkey, in Mexico, in Thailand, etc. Although that has been the case, Malaysia has not shown those signs. And it's a really interesting question because I look at Kuala Lumpur as sort of a competitive city to Bangkok, and certainly in some respects superior to Bangkok. I've done a video on comparing Bangkok to Kuala Lumpur and which one is better. You can kind of go and check that out and weigh in on your particular arguments. But in spite of this, Bangkok prices have gone up quite a bit. Malaysian prices, Kuala Lumpur prices have not. So why is that? And what's going on? Well, there is some recent news which I think is quite interesting and could suddenly change the investing environment and make it a more interesting place. So I've said for quite a while that I think if I don't buy some great property in Kuala Lumpur, I'll probably regret it 20 years from now. So I'm going to talk to you about how maybe that will be a little bit closer than we think. So let's dive in. Before we do, if you haven't already, please hit the subscribe button, hit the notification bell. Thank you for joining. For those of you who are new here, I am Michael from Offshore Citizen. We are some of the foremost international tax experts specializing in cross-border tax. So we help you to legally pay the lowest legal amount of tax possible. And we do that through using international means, whether it's you relocating to other countries, your company relocating, et cetera, essentially bringing tools that are not available to common accountants and lawyers in a specific country. And frankly, they don't understand how things work cross-border. Whereas we're very jurisdiction agnostic. We don't push any particular jurisdiction. We look at the solution that is best for you and figure out, okay, how do you optimize your global tax? Are there opportunities for plan B, ways to increase your freedom, ways to increase your security, both your financial and your personal physical experience, et cetera? And we design customized solutions tailored to you, no one size fits all, none of this nonsense, to give you the best life and the best kind of business success chances that are available. So if you're interested in any of that, please reach out to us. You can book a call with me, calendly.com/Michael-Rosmer. There's a link in the description below, or you can send a message through offshorecitizen.net. All right. So what has happened? Well, China just announced that they are going to invest 170 billion Malaysian ringgit, approximately 38 billion US dollars. They're going to do some things to extend the Belt and Road Initiative into into Malaysia. There is some things going on discussing with Malaysia, building an Asian fund between China and Malaysia and some other parties to kind of wean off dependency on the US. And so this could potentially be pretty good. So let's just kind of look at the situation in Malaysia as it stands. Like I said, the per dollar spent, the quality of life is extraordinary. I mean, you have great weather, the cost of living is low. If you're in the right areas, it's nice and clean. It's quite organized. People are English speaking for the most part. You have all the amenities. It's really convenient. It's really great. It's a lot more like, I would say that if you're in some place like KLCC, it's more like being in Singapore than it is like being in Bangkok. Now, some people will say this expression, hey, do business in Singapore, live in Kuala Lumpur, party in Bangkok, and so there are certainly trade-offs. But there's been a lot of development that's gone on there. There's a lot of new projects coming up. It's a really pretty interesting place. And I think it's just like a wonderful place to be. The Malay people are great. It's super convenient, especially if you want to be tied into Asia. One of the things that I've often said is, given that this is kind of the Asian century, it's good to have exposure to places like China and India from a business standpoint, but do you actually want to go and live in China or India? Probably not. And so because you have this mix of cultures in Malaysia, basically the Malay, the Indian, and the Chinese, you can get exposure and you can kind of passport into those markets without actually having to be there. And that's really cool. Okay? So I think lots of reasons to like Malaysia. In spite of this, as I said, property prices have remained pretty stagnant. If you go to, say, the park in KLCC and you look up at the Four Seasons, which was built a number of years ago, you're just going to see it's mostly empty. A lot of these places are mostly empty. And so what's essentially happened is there's just been overbuilding in the area. There's a lot of nice buildings. There's a lot of, great penthouse units. You can get, your own lift lobby. It's fantastic. The costs for what you're getting are great, etc. But they're largely empty. And so essentially they've suffered from overbuilding. So if we think about real estate markets are largely supply driven. Okay? If you get excess supply, prices are going to remain stagnant. If you have an inability to get supply and there's a lot of immigration, prices are going to go up. Pretty simple in that regard. So what is going on here? Well, they have a few things that they need to address. So certainly you could say, all right, well, what are they doing to control supply? They've already kind of like limited supply somewhat compared to what it was during the heyday of building. And so that's probably a positive factor for prices. Now you're going to see all this investment coming in. We have seen signs that the Malaysian government is now a little bit more open to trade. The Malaysian government has been a little bit kind of, MPD sort of thing. They've gone back and forth on some of their policies. Is it attractive? Is it not attractive? Hey, let's close down MM2H. Okay, we're going to bring it back, but it's much worse. We want people, we don't want people, etc. So what they definitely need to do in order to see upward price movements is they need to make it easier for people to come in. We've had clients who we help them to relocate there. Sometimes under MM2H, but sometimes under something like a Labuan Director's Visa, etc. We just have some people we're working with right now to help them relocate there. And so, okay, well that's something, but it's fairly inaccessible for a lot of people. And so you have to be able to have this influx of people because that's what's going to create the demand for real estate, which is going to push prices up. You may get a little bit if they open it up more to Chinese investors. And to be fair, part of the issue in Malaysia was they decided they didn't want the Chinese. They were kind of doing some anti-Chinese policies in this regard. So a lot of the money that has flowed into places like Vancouver, San Francisco, Australia, etc., from China has not flown as much as it could have. Even if we look at the money that's flown into Cambodia, right? There's been a lot of Chinese money going into Cambodia, and it hasn't flown to the same extent into Malaysia. Well, if they open up in that regard, you could see a pretty massive influx of capital, and that capital could come and end up seizing up a lot of assets there. Now, to be fair, obviously there's been some financial problems going on for people in China. There has been a bit of disappointment that a lot of people thought we would see a spike in demand as the Chinese economy reopened. We haven't really seen that. There are concerns from a demographic standpoint that China essentially is at peak consumption. I don't know if you can make some arguments one way or another on that, but there are some reasons to believe that they're not going to be a massive increased consumer in some of these global markets just due to the age of the people and the earning power and things like that. And so on this basis, you may not get the same effects that you did in places like Vancouver. However, what you're also seeing simultaneously is a lot of these other places are closing off to foreign buyers. So, for instance, in Canada broadly, but British Columbia and Vancouver specifically, there's a lot of rules now to prevent foreign buyers from entering that market. You're seeing similar things in UK. You're seeing similar things in a bunch of different countries that traditionally attracted a lot of this capital. And when those places close off, the capital has to go somewhere, right? They want to get it out of China. It's an extractive regime that you could simply not have your money tomorrow, and so people want to move that money. This is one of the reasons why Dubai has done so well. There's a lot of money that's flowed into Dubai because of the fact that people say, well, my money's not safe in my home country. Where do I put it? Okay, let's put it into Dubai. Let's buy some real estate there. Similar sort of deal when we're looking at things in the Malaysian market could happen. Again, haven't happened yet. There's lots of supply that has to be absorbed first, and we don't have a really great immigration policy that's going to allow an influx of people very easily the way that you would want to see for this. But that being said, I do think we're at an early stage. And so if you were looking for some sort of opportunities where you're saying, well, where can I go get an amazing quality of life for low costs? By the way, you can get really good tax treatment there. And, I'm thinking to myself, well, I'd also like to invest and have some assets long term that Will they go up? How fast will they go up? It's hard to say. I mean, you're definitely not going to get the greatest rental yields in Malaysia at this point in time. But that being said, over a 20-year time horizon, the asset could be pretty solid and give you a very different diversification profile from some other areas. Now, the thing that I will caution on that is they didn't treat foreigners very well during COVID, so that's not great. At the same time, you're in a situation where it's difficult to get PR in Malaysia. They don't allow dual citizenship. It's virtually impossible, or not impossible, but it's very difficult to get citizenship there, even if you wanted to. It's a long path. It's hard, etc. I know people who are Malaysian, who are married to foreigners. The foreigners have lived there for years and years and years. They can't get Malaysian citizenship. So there are some things that, if I was to compare it to some other regions, make it a little bit less attractive. But this being said, if you've got the extra cash to park, I mean, it's a beautiful place that you could go have a second home. Like I said, low cost. It's an asset that over time, it seems likely that they will open up and that capital will flow in, that essentially the inefficiencies will close down. You should have some sort of a closing of the gap between places like there and Bangkok, and that this would be a really great environment. So let me know what you guys think. Put it in the comments below, and I will look forward to seeing you on the next video.